Elon Musk just said something crazy. And it wouldn't look like it if you looked at Tesla stock today. It's pretty much in a free fall. So I want to give you guys this breaking news as soon as possible, as well as everything else that is happening today with Tesla that is newsworthy that you should know, not to mention the broader markets. So before we go ahead and get into that, what are we drinking on today? We're drinking on a Mountain Dew Baja Blast style. I think it's got like 44 grams of sugar, so not recommended, but pretty good. And disregard the fact it looks like the mic cover grew a beard. Hopefully that's not too loud. The cat, I don't know if he played with it or what, but let's go ahead and get straight into it. Tesla Economics says, Elon, forget about the house fight for a second. When are you live streaming FSD Beta V12 on X? And Elon Musk actually responded and said next week. Your V12 version is expected to be your level 4 fully autonomous level of beta full self-driving, which should really not be beta at that point, right? So we've been hoping for this for a while. Elon Musk says it could be by the end of this year that we actually get this version. If this is live streamed next week, then that could be a reality. And something that has happened recently, I think makes this a little bit more credible. Waymo and Cruise have just gotten approval to operate 24 hours in San Francisco. And they expect to launch another 400 and some vehicles next year. The competition is starting to heat up a little bit, and this competition is really forcing Tesla to get it moving as far as getting to a fully autonomous vehicle, not just beta for full self-driving. This, I think, is highly underappreciated from the stock, especially today. Tesla has cut prices for existing inventories of the Model S and the Model X's in China by as much as 6.9% on Wednesday. This is not to be unexpected, especially on your higher end models over in China. China's not doing well. Okay, so I don't think we're going to sell a lot of these regardless. If we can sell a couple more because Elon is cutting prices on used inventory or new inventory for that matter, that I think is a net positive, considering what's happening in China. China's revamped Model 3 is expected to go on sale in China within half a month. Fancy way of saying 2 weeks, with some stores already accepting reservations for consumers for the new model, according to local media. Jeffries says that Tesla and Apple are the most under-owned companies right now. As far as over-owned stocks, Alphabet and Meta were top on the list, as well as Microsoft and Nvidia. Tesla supplier CATL unveils battery that can add up to 400 kilometers of range in 10 minutes. That means vehicles powered by Zhenjiang can drive from New York to Boston about 215 miles after just 10 minutes of fast charging. Mass production of the battery is expected to be underway by the end of 2023, with shipping to begin in 2024. Exxon claims to be the world's first 4C super fast charging LFP battery. LFP stands for lithium iron phosphate, a type of battery chemistry that Tesla widely adopted in 2021 for its shorter range cars in place of nickel, cobalt, Altium. This is actually a very big deal. We've heard stories about Ford owners trying to charge their Ford F-150 Lightning and it taking 2 hours and getting less than 150 miles of range. You really need to get the timing down on charging to go to the markets with a vehicle and mass produce and mass sell a vehicle. You can't have something that takes 2 hours to give you less than half a tank of gas in equivalent mileage. That just does not work. 10 minutes for 200 miles? Yeah, that is something I think anyone could get behind and would really alleviate a lot of this range anxiety as well as charging anxiety. People don't want to go sit at a charger all day. I value my time a lot more than that personally. Jaguar is retiring the I-Pace in 2025. This is a complete reversal of the plans of the former CEO who wanted to improve the I-Pace. I think Sawyer Merritt is spot on. He shares an article from June 23rd, 2018 from Forbes that says, "Is Jaguar's game-changing I-Pace a Tesla killer?" Sawyer Merritt update and says, nope. So I think this does highlight something as well. There's a lot of fear among investors always, or just false representation of reality when it comes to Tesla, when there's a new model being put out or more competition, or in this case, Tesla cutting prices. It's always over exaggerated. If you listen to these articles over the years, you would have sold Tesla a long time ago, far before Tesla ever went through the recent rallies that we have seen in the past couple of years. So be careful on some of this FUD, can we call it that? Fear, uncertainty, and doubt that financial media does spread in regards to Tesla. Joe Tetmeyer over on Twitter spotted more Cybertrucks at Giga Texas. This comes after we spotted 2 of these car trailers hauling Cybertrucks. This was in the California area. Now these are seen outside of Tucson, Arizona. And 2 other Cybertrucks spotted on another car carrier spotted in Arkansas. They're just all over the place these days. And we can't leave this out. A cruise vehicle gets stuck in wet concrete while driving in San Francisco. We are also getting the best pictures yet of the Cybertruck. And take a look at these tires. This individual, Steven, over here on Twitter, even got a picture of the exact specs of the tire. If we can go ahead, it's this picture. We are getting up close and personal pictures all around for the Cybertruck. That's the back, a little bit more of the back. Now we have the actual attachment where you can attach like a hitch to haul a boat or whatnot. Then if we go ahead and look at some of these are interior pictures of the Cybertruck. It's got plastic on the seats. Looks pretty good to me. Pretty good screen. Pretty simplistic design. I do like it. I am a pretty big fan. And finally, some pictures of the underbelly. There you have it right there. More pictures of the suspension. And a picture of, it looks like, the back end suspension as well. Gary Black says on Twitter that he does not see the Model Y price cuts spreading elsewhere from China. So he does not think the US or Europe is going to be the next countries to experience price cuts for the Model Y. He says that Tesla's Q3 demand trends in China remain strong. The latest data point that we seen yesterday was 14,000 weekly insured units. He also goes on to point out that Cybertruck deliveries will start within weeks, creating halo effect that is likely to ignite the entire Tesla franchise, just as happened in 2020 when the Model Y was launched. At 43 times Wall Street's 2024 EPS, Tesla looks cheap versus 37% long-term EPS growth at 1.2x PEG ratio. Now, PEG ratio stands for price, earnings, and growth. Investors have not really paid attention to growth at all in 2022 and 2023. They haven't wanted to pay for growth because interest rates have been high and there's always this fear of a looming recession. That's why Tesla is cheaper than Apple and Microsoft, not on a PE basis, because Tesla's PE is about double what those companies are, but Tesla's growing at 3 to 5 times an Apple or a Microsoft's growth rate. So when you factor in that growth rate, Tesla is actually much cheaper. And eventually, when the Fed does start to cut rates or even pause rates with no more rate hikes, investors will start to pay a little bit more attention to the G in PEG ratio, and that should help out Tesla stock merely on a valuation basis. But again, just to be clear, what is really affecting Tesla stock today, pushing the stock down about 2%, is the further price cuts in China on its existing inventory in between $7,500 and $8,500. And again, like we mentioned in the beginning of this video, this should be expected on the higher end models, given what's happening in China currently. Last but certainly not least, as far as Tesla stock news, the Texas Commission approves Tesla's charging standard for federal funds despite concerns. According to federal regulators, companies must provide NACS rival combined charging system as a basic offering to qualify for the funds. So this means that $7.5 billion that has been allocated to electrifying America and creating chargers across America for the transition into electric vehicles, well, Tesla is going to be able to get a vast majority of that funding. This is very great news for Tesla stockholders. Fed officials see upside risks to inflation, possibly leading to more rate hikes. Federal Reserve officials expressed concern at their most recent meeting about the pace of inflation and said more rate hikes could be necessary in the future unless conditions changed. Minutes released Wednesday from the session indicated. That discussion during a 2-day July meeting resulted in a 0.25 percentage point hike that markets generally expected to be the last one of this cycle. However, discussion showed that most members worry that the inflation fight is far from over and could require additional tightening action from the rate-setting Federal Open Market Committee. Quote, with inflation still well above the committee's longer run goal and the labor market remaining tight, most participants continue to see significant upside risks to inflation, which could require further tightening of monetary policy, the meeting summary stated. While some members have said since the meeting that they think the further rate hikes could be unnecessary, the minutes suggested caution. Officials noted pressure from a number of variables and stressed the future decisions will be based on incoming data. Almost all of the meeting participants, which included non-voting members, were in favor of the rate increase. However, those opposed said that they thought the committee should skip a hike and watch how previous increases are impacting economic conditions. Quote, participants generally noted a high degree of uncertainty regarding the cumulative effects on the economy of past monetary policy tightening. The minutes noted that the economy was expected to slow and unemployment likely will rise somewhat. However, staff economists retracted an earlier forecast that troubles in the banking industry could lead to a mild recession this year. Specifically, officials cited risks associated with a potential sharp decline in CRE, commercial real estate valuations, that could adversely affect some banks and other financial institutions, such as insurance companies, that are heavily exposed to commercial real estate. Several participants noted the susceptibility of some non-bank financial institutions, such as money market funds and the like. For the future of policy, members emphasized two-sided risks of loosening policy too quickly and risking higher inflation against tightening too much and sending the economy into a contraction. So what this means, what we can summarize this, is the Fed is going to go too aggressive, right? They're going to go too far. Hopefully they can understand what they're doing, but the Fed usually does go too far. And then what's going to happen? You're going to get a lot of rate cuts. That's basically what the Fed is saying here. They're saying we're not going to stop until inflation is 2%, regardless of what happens to the economy. Unless you go through a crash in the markets, unless you go through a real estate crash, which looks a lot less likely, or unless we actually do go into a recession, we're not going to stop raising rates. We might pause for a little while, but you're probably going to get more rate hikes down the line. Currently, markets are expecting a 40% chance of another increase in rates by the end of this year. So we're not all expecting another increase. The majority of investors are not expecting an increase, and that creates a little bit of a problem for equity markets, because what if we do get an increase? That's a problem. Markets are expecting the Fed to cut rates the first time in March. The only way that happens is if inflation really does fall off of a cliff, essentially, with some of your rental data. And I don't know how that happens unless you see a crash in real estate, or unless the markets go through a really big crash or a recession. It does not look like we're getting the first rate hike in March, and that could add some more downside pressure to stocks such as Tesla, especially stocks that are heavily correlated to what the Fed does and financing cost. Tesla is like strangled by the Fed. Every time they raise rates, well, it forces less people out of the market that can afford to get a loan to buy a Tesla. About 90% of automobile buying is done through financing. So that little bit of a problem for Tesla. But as you know, if you're a long-term investor in Tesla, the day the Cybertruck starts deliveries, that's probably the last dip that you are going to get for quite a while. This is because there's so many pre-orders of the Cybertruck, and it's likely to have a very good effect on demand basically everywhere. Once people start to see the Cybertruck and the Cybertruck is on the news, if the news decides to cover that, which it would be more newsworthy than you see a lot of things that are on the news, but maybe that's a topic for another video, then I think that's the last dip that you probably get in Tesla for a while. And it's going to increase demand for the whole entire brand. This is very positive, and this could just happen weeks from now, as well as the refreshed Model 3. That should also be very good for Tesla heading into 2024. And really the bottom line is, Wall Street is expecting 27% delivery growth for 2024, and Wall Street is expecting 29% EPS growth for 2024. That would be the worst that you have seen since Tesla became a publicly listed company back in 2010. The slowest growth rates. I'm not willing to make that bet, especially since the Cybertruck and the refreshed Model Y are coming to market in bigger numbers in 2024. That seems like a foolish bet to make. Let me know if you think Tesla is going to beat these estimates for next year. As far as Tesla technicals today, the RSI is something I am watching pretty closely. Every time you get to this 30 level on the RSI, you tend to bounce. Last time that happened was back here in April of 2023, just about 4 months ago, and Tesla stock bounced from there and made its way to about $300 per share. This was at $153 per share. Did you get to this oversold RSI? You're starting to get there again. You're very close. You're at 32.82. So really any time now you would expect to see a bounce or at least a plateauing of Tesla stock. And this could be a very good time to buy the dip or even put on some of your shorter term trades. It's probably going to be a pretty aggressive bounce when that bounce does come. But I think we have a lot of other things we're contending with in the time being, like Nvidia earnings next week, like Walmart earnings coming tomorrow morning, and Fed Jerome Powell next week at Jackson Hole. These are all going to be big events for the markets. Tesla's option activity today is highly elevated. You have seen 618 orders totaling $845 million with a positive order value of 39%. So a little bit better than yesterday's positive order value at 24%, and the dollar amount is much higher than yesterday's number at $725 million. The 2-year treasury today is almost breaking out to a new high of this cycle. The previous high that you've seen was back here in March of 2023 when the 2-year treasury hit 5.01%. You're currently at 4.96%. This is up 1 basis point on the day today. If this does break out, it's largely correlated to Fed policy, and it would cause the markets to be a little more fearful. On the other hand, the 10-year treasury is up 2.5 basis points on the day and is breaking out to a new high of the cycle. Last time you've seen the 10-year treasury this high was October and November of 2022. This was the low for the market. So in the short term, the 10-year treasury being this high causes interest rates for everything to go higher. Anything that has to do with borrowing money or credit goes higher. That does mean the risk of going into a recession in the near term does go higher. The risk for companies to go bankrupt goes higher, as well as the attractiveness of stocks really is not that great. If the 10-year treasury is offering you 4.25% versus stocks, a lot of stocks that have not done well in the past 18 months, well, the 10-year treasury does not look like a bad alternative to stocks. There was a saying called TINA, stands for there is no other alternative. And that was a phrase that was used for the last 10 or 15 years, ever since the great financial crisis, when bond yields were very low, near zero. There was no other alternative but to be invested in stocks. Well, now there is an alternative. And this could be a problem for stocks the higher this 10-year bond does go. But the good news is this is a 10-year treasury. If it's at the highest you've seen in basically 10 or 15 years, this means investors are expecting really good growth within the next 10 years. If investors were expecting a lot of Fed rate cuts and a bad economy, this 10-year treasury would be much lower than where it is today. The 2-year treasury heavily correlated to Fed policy. The 10-year, not so much. The 10-year is more correlated to how investors feel about economic growth and activity over the next 10 years. The higher this thing goes, the greater likelihood we see better growth in the future. So short term, not so great. Long term, very good if the 10-year treasury does continue to rise. So that is going to do it for this video. Let me know down below in the comment section if you are taking advantage of this dip in Tesla and you are buying the hell out of it. Let me know down below in the comment section. Thank you for watching. Hit the like button and subscribe to the channel if this is your first time here, and especially if you made it to the end of the video. My name is Michael Tyler. Thank you again for joining me, and I will see you in the next one.